Barker Brother back with another quick video. If it's your first time here, we basically talk about all things money. So we're talking credit cards, credit unions, stock market, side hustles, real estate, etc. If that's the type of stuff you like, go ahead and hit the subscribe button, like, share, and pop the notification bell while you're at it. So in this video, we're going to talk about something real simple that I never really hear talked about, and that's the difference between the Vantage credit score and the Fico score. A lot of people think systems like Credit Karma that use Vantage are inaccurate, but they're really not inaccurate at all. It's just two different types of credit scoring models, and you'd be surprised at how similar they are. So we're just going to go over them real quickly in this video so you'll be up to speed on the differences when they're calculating your credit score using Fico or using the Vantage model. So the first one we're going to look at is Fico, which more people are probably familiar with. So the Fico pie is made up of 5 parts. So the first part, which is the most important, is your payment history. That's 35% of your score. So a little over your 30 of your score is just based on how well you're paying your bills, how much you're paying on time. Hopefully you're at 100% because anything under 100% really is not good. Okay, so 35% is your payment history. Next is 30%, which is your credit utilization, or the amount of available credit you have that you're actually using at that time. For instance, if you have $10,000 worth of credit and you're using $2,000, you're at a 20% credit utilization rate. The experts say anything under 30% is good. In my opinion, the sweet spot is to be at 10% or less. So second part, 30% credit utilization. Okay. Third part, length of credit history, 15%. This is all of your trade lines added together and then divided to come up with the average length of your trade line history. For instance, 2 credit cards that are, say, 3 years old, and then the next credit card is, let's say, 6, we'll say 6 years old. You add them all together, you got 12 years of credit history divided by 3 lines. Your average length of history would be 4 years in that case. So 15% of that score is the average length of your credit history. And then the 2 that I think get left out a lot, which is your credit mix. So 10% of your score is based on the mix of accounts you got. So that's revolving accounts, which is traditional credit cards and stuff like lines of credit. And then installment accounts, which would be a mortgage or maybe a car note, or even like if you bought some furniture that had a definite beginning and end date. Also, personal loans factor in that too. So that's 10%, your credit mix. And then the other 10% is your pursuit of new credit. This is basically the amount of hard inquiries that you have on your credit report at any given time. That's 10% of your score, your pursuit of new credit. Okay, so basically there it is. There's Fico in a nutshell. Now we're going to throw up the Vantage score calculation model so you can see the difference between Fico and Vantage. Okay, so the first thing we see with Fico is your payment history is even more prominent than in the Fico calculation. And Vantage, your payment history is worth 40% of your score, so extremely high impact. I could not stress enough, your bills need to be paid 100% on time. Okay, and then the credit utilization is worth less. In this case, the credit utilization in the Vantage system is only worth 20% of your score. Now, when we start talking about the length of credit history, remember in Fico, it's 15%. In Vantage, it's worth approximately 21% of your score. So slightly different calculation, okay? Now, your current balances, which is not part of the 5-piece Fico pie, is part of the 6-piece Vantage pie. So the current balances is basically what are your current balances in reference to the limits that you have, and they use that as a way to evaluate you, and they're saying it's 11% of your score. And then recent inquiries is only a 5% impact, and then available credit is only a 3% impact. So as you can see, the calculations are a little different, and that's why the scores are a little different between a Vantage calculation and a Fico scoring model. And people think that Vantage is useless, but this is not true, because actually about 25% of your lenders do use a Vantage scoring model, and they don't always use it. They may use it sometimes, but basically you got like a 1 in 4 chance of the scoring model being Vantage that's used as opposed to Fico. But this is just something to kind of give you an idea of why the scores are a little bit different between Vantage and Fico. For instance, stuff like Credit Karma is Vantage, and then like if you go to Experian, the actual Experian.com, that is a Fico scoring model. But I actually had a lender for a credit issuer use Vantage a couple years ago. So I mean, sometimes it's credit issuers, sometimes it's used in automotive financing. So there's more financing than just mortgages and credit cards. So you got all different types of financing out here. So be wary of how the Vantage model is calculated too. So that's all I got for you guys for today. I just thought it'd be cool to kind of go into the differences between Fico and Vantage. So I'll be back soon with more videos. Let's talk money. Let's level up together. Until then, Bargain Brother out. See ya.